So before we get started, check out the following links in the description box below as highlighted in the image shown. So you'll be able to get our past papers, our link to our official website, link to accreditations, our link to donation page, and contact details in the description. So once you'll be watching a certain video of any lesson or of any past paper, you'll be able to get all these links, and you can be able to get to download past papers, to reach to our official website. You'll be able to see links to our accreditations so that you can see which authorities have accredited us. You'll be able to reach to our donation page as well as our contact details.
Let's look at Fundamental Management Accounting, December 2023. Question number 1. Highlight arguments against introductions of management accounting system in business organizations. Arguments against or limitations. Number 1, we can talk of a lack of specific procedures. Lack of specific procedures. Say that management accounting does not have any specific rules, does not have specific rules and principles to follow. That means that each and every organization can derive their own ways of generating their books of account. Number 2, talk of costly. We said that the installation of management accounting system, the installation management accounting system requires a huge expense as they need to hire management, to hire a management accountant, to hire a management Number 3, we talk of dependency. That's another argument against. Dependency says that management accounting is dependent upon management accounting is dependent upon financial accounting and cost accounting for various data. Full stop. The authenticity of information, the authenticity of information is dependent on the accuracy of cost accounting and management accounting. and financial accounting. Next, we talk of personal biasness. We say that it is subject to the personal bias, management accounting. By the management. Full stop. The effectiveness of management accounting, the effectiveness of management accounting effectiveness of management accounting may be affected by interpretation, may be affected by the interpretation, in the analysis of the analysis capability of the individual. Full stop. Number B. Be it a question read, Saudi Electronics is a popular car radio retailer, and the full information was obtained from one of its outlets. Have average sales, which is 750 units per day. Maximum sales, we have 950 units per day. Minimum sales 500. Lead time 12 to 18. Reorder quantity, we have been given as 17,500 units. Then you are to required determine the level of stock that a replenishment order will be required. In this case, you are meant to determine the other ones. That's a reorder level. Now, reorder level is given us. Reorder level is equal to maximum usage multiplied by maximum lead time. In this case, we look at the usage. Maximum usage we have been given as 950 units. We multiply the maximum lead time or reorder period, which is 18. If you take that 950 multiply by 18, you get 17,100 units. Now, this is the stock level that needs to that a replenishment order will be required, or needs the company should place an order when it reaches this reorder level. Then we have the minimum stock level. Minimum stock level is equal to reorder level minus average usage or consumption multiplied by the average lead time or reorder period. Now, in this case, we are going to take the reorder level we called is 17,100 minus into bracket average usage. We are given the sales, average sales as 750. We multiply by the average lead time. We are going to take 12 plus 18. Answer we divide by 2. 17,100 minus, have 12 plus 9, 12 plus 18. Divide by 2, you get 15. Multiply by 750. you get 11 to 50. Therefore 17,100 minus answer, you are getting 5,850 units. 5,850 units. Then lastly, have the maximum stock level. Maximum is equal to reorder level plus reorder quantity, or sometimes we are going to be given the EOQ. Everything we minus minimum usage multiplied by the minimum lead time. This, therefore, we are taking 17,100. We add reorder quantity. Do we have reorder quantity? Yes. 17,500. Have 17,500 minus minimum usage. Let's confirm the minimum usage. We have 500. Now we take 500. We multiply by 12. 1,700 plus 17,500, you get 34,600 minus 500 by 12, you get 6,000. 34,600 minus answer, you get 28,600 units. Then lastly, the average stock level. Average stock level is equal to minimum stock level plus maximum stock divide by 2. That means we are taking 5,850 plus 28,600. The answer we divide by 2. If you do that, you get 17 to 25 units. 17 to 25 units. That becomes the answer for Roman number 4. Then finally, part C. Part C, we are told that Rolling Motor Limited is a manufacturer of quality trucks, which they sell at 3,500,000 each. The cost of the company can be separated into fixed and variable cost. The following is the budgeted data for the first 6 months of the year 2024, January to June. Then fixed costs for the 6 months have been spread evenly over the period and are reviewed to arrive at the monthly projections. All right. Then you are told that calculate the total fixed cost for the period using high-low method. This means we are meant to identify the highest cost. Say that the high-low method, we have to determine the highest cost. We minus lowest cost. Everything we divide by the highest activity level. We minus lowest activity level. In that case, will give us what we call the B, because you need to generate a equation y is equal to a plus bx. Now, in this case, let's identify the highest cost. Look where the highest cost I'm seeing. We have that is the month of March. and the lowest cost should be 22,000. Now that is the month of what? Month of June. Now therefore we get B is going to be the highest cost, which is 32,500,000. We minus 22 million. Everything we are taking 15 minus 8. $32,500 minus 22 million, we get 10,500. We divide by 15 minus, get 7. Now the answer we are dividing by 7, you are going to get B as 15. Now we can insert this in our equation. You can pick one. Can I take this one or this one? Let me use that's the month of March. We can write y is equal to a plus bx. Now we are assuming that our y, it is going to be 32,500 is equal to a plus b. We have gotten 1,500. We just try and get 3 zeros. Multiply by 15 is 32,500 minus minus 22,500 is give us A, which is the fixed cost, is equal to 32,500 minus the answer, you get 10. Now our fixed cost, we multiply by 1,000. Our fixed cost is equal to 10 what? 10 million. 10 million. Calculate the fixed cost of in that case we have 10 million. And then we have calculate the break-even point in units and cells. Now the break-even point in units is equal to the fixed cost divided by the contribution per unit. The contribution per unit is equal to selling price minus variable cost. Now in this case, what was our selling price? Our selling price were given as 3,500,000. Now we pick 3,500,000 minus the variable cost per unit, the value for P, it was 1,500. That case you get 2 million. Now to get a break-even point BP in units is going to be the fixed cost, which we had 10 million. We divide by 2 million. You get 5. Then the break-even point in sales revenue. In just case we take the break-even point in shillings, is going to be 10 million over 2 million. We multiply by the selling price, which was 3,500,000. Just take 5 multiplied by 3,500. Eventually you get the break-even point in sales value is going to be Kenya shillings 17,500,000. 17,500,000. You are to do that for you to scoop the entire 20 marks for question number 1.
So if you like this video, you can always enroll with us. You'll be able to access more of these revision sessions, and also you'll be able to find well done lectures or pre-recorded videos for all the KASNEB courses as well as CHRP. And in case of anything, you can always reach us out. We have our contact details on the screen. Feel free to call, feel free to WhatsApp anytime. So thank you, and let's meet in our next session.